have identified 4 key findings on salary cycle. Firstly, monthly salaries entries were incorrectly keyed in as flat RM2,000 debit to salaries and credits to bank. This bypassed statutory requirements misstating gross salaries and employee liabilities. Management must pass an adjusting entry to debit salaries by an additional RM315 to reflect the true gross salary of RM2,315 while crediting the employee liability account for EPF RM300 and SOSO RM15. Second, the year-end statutory remittance were poorly mapped. For the RM7,200 EPF payment, we must split the entry by debiting EPF employee liability for RM3,600 and EPF employee expenses for RM3,600 against a credit to bank. Similarly, for the RM360 SOSO payment, we must debit SOSO employee liability for RM180 and SOSO employee expenses for RM180 against a credit to bank. This adjustment ensures matching expenses and liability accounts are perfectly clear. Finally, we detect a severe internal control breakdown involving duplicate, unvouched gross entries with zero effect on ending balance. This directly violates the occurrence assertion and strongly indicates manual data manipulation or system corruption. Management must immediately purge the zero effect entries from the salaries, wages, EPF and SOSO ledgers, while internal audit must launch an urgent investigation into the accounting software system integrity.
I will talk about the audit findings for the expenses cycle of Bubble Sediam Berhad. We found several critical errors regarding incorrect amounts, missing records, and double booking. Our first finding is incorrect depreciation expense. The clerk recorded RM12,400 in the general ledger. However, based on payment voucher 150526, the company purchased a new motorcycle for RM10,000, which was omitted from the asset base. The correct depreciation should be RM14,400. Therefore, the expense is understated by RM2,000 and net profit is overstated. Next, we detected unrecorded utilities for Q4. The general ledger shows zero entries for both water and electricity from October until December 2024. To verify this, we checked the bank statements and tracked the last utility payments made at year-end. The bank statements prove that cash went out to pay the bills, but the clerk completely missed recording them. This causes the year-end operating expenses to be understated. Moving on, we found a major issue of double booking. The clerk recorded the exact same transaction twice for license, maintenance, and road tax. Our audit evidence shows that the only one official payment voucher exists for each case. For example, for license, PV 150503 from MPAJ only shows a single payment of RM12,000, but it was keyed into ledger twice, making it RM24,000. The same copy-paste error applies to maintenance and road tax, heavily overstating these three ledger balances. The fifth finding is the misclassification of operational expenditure. The clerk debited RM100 into account 9017 for office renovations. However, petty cash voucher on March 15 clearly state this was for a door lock Solex. A simple door lock replacement does not increase the capital value of the building. It is a minor repair and should be classified under repairs and maintenance expense, making the renovation account overstated by RM100. Finally, we discover differences between the general ledger and the SOCI. While the ledger balances are highly overstated due to double booking, the clerk manually typed the correct figures into the final SOCI to hide her mistakes from management. For instance, the ledger shows RM24,000 for license, but she reported RM12,000 in the SOCI, just to match the invoice. This indicates a server breakdown in internal controls and manual manipulations, making the ledger records completely unreliable.
This is audit findings in sales and account receivable cycle. For the first findings, we have missing documents of invoices. Invoice 150504 and Invoice 150505 are missing from the document list. The absence of supporting invoices weakens internal controls and increases the risk of fraudulent financial reporting or misappropriation of assets. Without adequate supporting documentation, the validity, accuracy, and authorization of the recorded sales transaction cannot be verified, which may result in the misstatement of the sales and account receivable. For the second findings, we have incorrect recording for receipt notes customer. The receipt note RN1504, which belongs to the customer Hamel Silly, was incorrectly posted to the account of Emily Cruz. This misposting compromises the accuracy and allocation assertion of account receivable, resulting in inaccurate customer balances. It may lead to customer disputes, incorrect collection activities, and an unreliable account receivable aging report. The third one is duplicates and unvouched journal entries. The general ledger account for provision for bad debt, sales, and doubtful debt contain duplicate and unsupported journal entries that offset one another, resulting in no effect on the final account balances. Although the final ledger balances remain unaffected, these entries violate the occurrences and measurement assertion. They inflate transaction volumes, weaken the audit trail, and indicate deficiencies in journal entry controls, making reconciliation and future audits more difficult. And the final finding in sales and accounts receivable cycle is misclassification of discount allowed as written in words. The RM880 transaction for Charlie was incorrectly recorded as written in words instead of discount allowed. This resulted in a classification error, causing written in words to be overstated and discount allowed to be understated, which may affect the fair presentation and analysis of sales adjustment in the financial statement.
The first finding relates to supplier payment not being made within the agreed credit terms. During our audit, we found that no payment had been made for invoice number T1422 issued by Berlin Warehouse Berhad, which had a credit term of 60 days, and invoice number 2301 issued by Party Distribution Center, which had a credit term of 30 days. This outstanding balance remained in the account payable records at year-end. Failure to settle supplier balance within the agreed credit period may result in overdue liabilities, damage the company's relationship with supplier, and increase the risk of late payment charge. Therefore, we recommend that management closely monitor supplier due dates, ensure payments are made within the credit terms, and maintain proper supporting documents such as payment voucher and bank transfer record. The second finding concerns the owner's personal withdrawals that were not recorded as drawings. Audit testing identified that costs amounting to 1,500,000 ringgit withdrawn by the owner for personal use were not recorded as drawing. Instead, they remain in the purchase accounts, causing purchase to be overstated and drawings to be understated. This results in inaccurate financial reporting and the misclassification of transaction in the financial statement. To address the issue, management should ensure that all personal withdrawals are promptly recorded as drawing instead of purchase. The company should also implement proper approval and documentation procedure for inventory withdrawals to strengthen internal control. The third finding is a positive audit observation. We found that all purchase transactions tested were supported by valid supplier invoices and were accurately recorded in the purchase ledger and account payable records. No unsupported purchase transactions were identified during our audit testing. This indicates that the company's documentation process for purchase transaction is effective and helps reduce the risk of recording invalid or incomplete purchase. We recommend that Baba Sdn Berhad continue maintaining proper documentation and authorization procedures to ensure the reliability of the accounting records and to strengthen internal control over the purchase and account payable cycle. These are the evidence for the third finding. These are from the invoice related to the purchase from the supplier.
Moving to our audit findings for the cash and bank balances cycle, we identified 3 critical recurring errors that impact Baba Sdn Berhad ledger. First, we noted the inaccurate recording of monthly salary amounts, the gross salary expenses, and corresponding double entries were keyed into the accounting system incorrectly, failing to match the authorized payroll summary. This data entry error directly caused a discrepancy between the ledger and physical cash payments, leaving the year-end cash book balance misstated and creating an incorrect mismatch on the bank reconciliation. We recommend that every monthly payroll journal entry be prepared directly from the authorized summary and independently reviewed before posting. Second, we discovered an incorrect double entry for the EPF account concerning payment voucher PV150529 on December 20th, 2024. Instead of isolating and debiting employee and employer EPF contribution against a credit to the bank, the transaction were misallocated in the ledger. This distorted cash book credit records and left the cash disbursement appearing outstanding against the bank statement. Finally, a similar systematic error occurred with the SOXO account under payment voucher PV150528, the proper double entry pathway for separate employee and employer SOXO lines was not followed, preventing the cash book credit total from matching physical cash cleared by the bank. For both the EPF and SOXO issues, we recommend adjusting the payment voucher to separately debit the respective employee and employer contribution accounts while crediting the bank. Moving forward, strict reconciliation between the cash book, payment vouchers, and bank statement must be performed.